Hello everyone, this is Andrew McNair from SWAN Capital with our April 2016 Educational Economic Update. In this month's video, we're going to be talking about some of the major economic events that influenced markets last month and give you some insight into what it might mean for you as an investor. Now, as always, please stay tuned at the end for a required disclosure statement. So, after several rocky months for financial markets, March turned out several straight weeks of gains, giving investors the hope they wanted for spring. Now, after months of strength, the US dollar weakened against other currencies. Now, what that means is a strong US dollar makes domestic goods here more expensive to the foreign buyers over there, which has hurt corporate profits here. So a comparatively weaker dollar would help make U.S. products more competitive on the global market, which will hopefully reflect in the international demand we see for our goods. So the other thing that was on the horizon was the monetary policy of the U.S. and other countries. So last month was very important for central bank policies. So you have the central bank there in Europe, you have the Bank of Japan, and the Federal Reserve all having meetings to determine monetary policy. And in recent years, there's been a big divide between the Fed, which is moving away from ultra-low rates, and the European and Japanese central banks, which are fighting slow economies with negative rates and quantitative easing, like we did a few years back after 2008. Now, however, these discussions at the March Fed meeting showed that U.S. economists are actually becoming more concerned about the growth here. Now, during the March meeting, the Fed voted to hold rates steady, indicating that officials are planning for a slower pace of rate hikes this year. Remarks after the meeting showed that the Fed economists are divided. Some officials want to start raising the rates soon, while others are sitting back and they want to see and wait and see what to do. Now, however, the Fed Chair Janet Yellen, who's in charge, has been clear about her intention to remain cautious in the face of global risks that we're seeing. Now, we also have some good economic news, and that came in last month about the GDP, the gross domestic product, which grew at an annual rate of 1.4% instead of the 1% that was projected. So that's fantastic news. Now, much of the improvement came from stronger than expected consumer spending. Basically, we're spending more than they thought, which is great for the economy. Now, the labor market also continued to add jobs in March, which supports this trend of consumer spending. Now, on the other hand, the increased spending at the end of 2015 may have come at the expense of growth for the first quarter of 2016. So consumer spending data showed that January was revised lower, which caused all these GDP forecasts to plummet, which was not good for projections. Now, looking ahead, we'll be awaiting reports from the first quarter that ended in March to see whether the numbers support or weaken concerns about growth this year. So we're not the only ones who will be closely monitoring this data, by the way. We know that the Fed will be watching ahead of its April meeting to see whether the economy can support additional rate increases, which are necessary. We need to increase rates. Will they raise interest rates in April? It's hard to say, but it's not likely. Currently, most economists predict that a June 2016 interest rate hike might make more sense. Now, that's going to be it for April's educational update. We talked a lot about monetary policy because there's a lot of news coming around that, and it has a big influence in the markets. Now, if you have any questions about what we went through, because we waded through a lot of financial statistics, please give our office a call at 850-380-9558. That's 850-380-9558. And by the way, we have our April Shred Day. It's an annual event we always have. Bring out your documents. We'll shred them for you. And we're grilling out. So come by 10 to 12 on Saturday, and we'd love to see you at our annual Shred Day. See you then.